In today's video, we're going to discuss why off-plan properties are one of the biggest scams happening in Dubai and why you should avoid it. Okay, so guys, many smart investors have been buying off-plan, but right now I believe it's just best to avoid them totally, even if you're buying from credible developers. So if you don't know what off-plan is and you're watching this from outside of Dubai, basically it's when a developer sells you a property before it is developed, right? So they show you a plot, an empty land, and they tell you this plot we're gonna like build a 100 floor building, a tower on it, right, with a payment plan. So you pay 20% down payment, whatever like the developer is selling you, right? Each developer has their own payment plan. Basically, they tell you 20% down payment, you pay 5% every quarter, and every again developer has their own payment plan. I've seen Danube, for example, having 1% on a monthly basis. There are many different payment plans, but most of them are scams. And I'm going to tell you why. Even though these developers are multi-billion-dollar companies, they're kind of making their money off you by overcharging you. We have multiple big developers such as Damak, Emar, Danube, Shobha, Miras, and Bingati, many more, right? But most of them, I would say like all of them and a majority of their projects, they're scams. And I'm gonna prove it to you guys. So look, this video is for one type of person. First of all, if you've got serious capital and you want to invest into Dubai real estate market, then this video is for you. If you've got millions of dollars in capital to deploy into the market, then you're gonna want to watch this video, because the numbers I'm gonna show you in this video are just gonna kind of piss most of you off, especially if you've invested in Dubai. I'm an investor myself. I bought 9 apartments, and I've also made the same mistake. So this is coming from an investor to investor. I'm not an agent. I'm not affiliated with any brokerage company. I'm investing personally, and I've also got properties doing 10% net profit every single year on rental income, which is kind of unheard of in Dubai. And if you're buying like right now, cash right now, most of you are not going to be able to make 10% net profit on rental income. Okay, so I'm going to show you exactly why the off-plan market is broken and what to do instead. So if this is you, then you need to know that the off-plan market is designed to take money from you. It's designed to take liquidity from you, basically scam you out of your money, not build your long-term wealth. A lot of people are making money on off-plan flips, but guys, that's not a strategy. You're gonna lose money in like at some point. Basically, a lot of people buy off-plan, they flip them, right? That's a different strategy. If you're building long-term wealth, right, you're here to buy properties and hold them. This is not the right strategy. You may make money with off-plan speculations, but the way I like to kind of refer to off-plan is like, for example, let's say, just for example, let's say this phone is charging right now. Okay, so let's say this phone is worth, for example, $1,000, right? In off plan. So developers sell this for $1,200 for you when they sell it, right? So this phone is worth 1,000, but they sell it to you 1,200, and you're very happy because you're paying only 20% down payment, and you flip this dollars. So you bought for 1,200, and you sell it for 1,400, right, to someone else who buys the hype. But anyway, both of you are buying this more expensive than the market actually is, right? So the market price is $1,000. You buy for $1,200, and you sell it to someone for $1,400 based on hype, and you make money in off plan. You call this a strategy, but basically it's just selling something that is not worth that much to someone. You've made money, but I dare you to hold that property. Any like long-term investor, people that have like a lot of money, billions of dollars, everyone is in the business of building equity, not flips, right? You make the real money on holding properties for 20, 30 years, building cash flow with it, and that's how you make crazy money. So that's what we're going to discuss here, and I'm going to tell you why the off-plan market is designed to take it away from you. So guys, in 2024, off-plan accounted for 63% of all Dubai sales. That's crazy. Like 63% of everyone in Dubai bought off-plan, not ready properties, not the properties that you actually see in Dubai. And there's a very clear reason for that. So $255 billion worth of properties were bought in off-plan. And the average investor buying off-plan is paying 20% or more than the secondary market price. Guys, these are data that I've collected. These are actual data and stats. You can go check them yourself, okay? You can just search online. What is the average buying price? Basically, off plan, you're buying 20% more than the average price. This is crazy. Like, this is stats open right in front of our eyes. And I have no idea why investors do not check. For God's sakes, just go check the tower next to it. If you have a ready tower, okay, go check the prices. Again, some of you may say that the prices you see are the same. But again, there's one difference that you're making. It usually takes time for these off plans to depreciate and drop in value. So if you buy something for $1,400 as mentioned, like this, right? The value is $1,000. Obviously, it's not going to depreciate in a year. It's not going to depreciate and go down in a year. But in 4 or 5 years, you're going to see the price going down to $1,000. Why? Because the secondary market is selling for 1,000 and you've bought something overpriced. So it takes time for the market to realize that and the value goes down. I used to live in a tower called Damak Paramount. Basically, my friend had bought a 3-bedroom for 4 million dirhams. Now the value of that is 2.8 million dirhams. You can just go check that tower yourself, okay? This is sold from the developer. I'm not gonna mention how many years he had to wait for this construction to be completed, and his money was parked. He lost also a lot on that. So this is not investing, this is kind of donating your money to the developer, okay? You're buying something for a more expensive price. And I'm going to show you the exact strategy I personally use to get 10% net profit every single year on rental income. So I buy undervalued assets and I keep them for life. I keep them for 20, 30 years. You never sell something that is working and is making you money. So let's start. The 3 major plans that stop investors from making money on off-plan, okay? Inflated launch price. So in 2018, off-plan buyers were paying 1,319 per square foot, while ready ones were only 911. Guys, these are stats you can easily search up. I've gotten everything based on actual research. I wanted to give you numbers. 45% more premium than basically secondary. So that's a crazy price. You're paying 45% higher only because you're buying off plan. And the main reason for that is the real estate market in Dubai, guys. I hate to say it, but you're being scammed by real estate brokerage companies, the big ones that you know, and real estate agents. Why? Because they're making 5 to 7% commission on off plan. The developers are making shit tons of money on off plan. Why would someone sell you secondary? And the payment plan illusion. So they make it feel easy. 10% down installment during construction and balance on handover. So guys, the off plan trap that most of you fall for. I'm going to break down these 3 patterns that investors fall for. So basically, inflated launch prices. In 2018, there was a research done that off-plan prices are 45% higher than the secondary market for the same thing, same location. That's a crazy stat. 45% higher. You can go do the research yourself. My friend bought an apartment in Damak Paramount, a 3-bedroom, 4 million dirhams. It's now 2.8 million dirhams. So $1.2 million to 1.2 million dirhams in loss. That's $300,000 that he lost on depreciation, okay, from the developer. I'm not going to even mention how long it took for the developer to actually hand it over. And the payment plan illusion. People usually think they just pay 10% down payment and they pay the rest during construction. A lot of these developers are going to restrict you on making full payment before you can resell it to anyone. And guys, you're going to get court notices. They're going to come after you if you cannot make your payment on time. So they just kind of grab you like that, okay? And that's assuming you can find a buyer for that price. Like if you really need to sell, you're gonna sell your property at a lower price than you bought it for if you ever face issues, right? And the commission conflict. As you know, agents get a lot more commission on some of these new developers. They're offering 10% commission to sell something. Obviously, agents are gonna push that, and the secondary market is only getting 2%. MR is doing 2% for a lot of the projects, but it's still much easier to sell off plan. Guys, imagine you're an investor, you come to these agents and you tell them that basically I want to buy. All they have to do is just show you a brochure. This is how it's going to look like, buy multiple units. That's it. Like they're just selling you a dream. You just have to come to a presentation, nice office, beautiful people, beautiful, like everything, right? They tell you that this is the brochure. Trust me, it's going to go up, buy. Guys, I've seen the market enough times to know what's bullshit and what's not. So But with the secondary market, you have to put 400, 500 offers to get a good deal. What type of an agent would go through all this headache to buy you, a good deal? The type of agent that wants, long-term relationships. But unfortunately, people here just think short-term, and they can make 3, 4 times higher by selling you off plan. Okay, and these are like real investor losses that I'm gonna show you in a couple of like projects. Okay, by two, okay, by 2000, let me see, where are we? This is Damak Paramount. I don't know why the text is looking like this, but basically by 2019 to 2020, the apartment was worth 2.8 million dirhams, right? That's a 30% loss. This is compared to what I told you from 4 million. This one went down in Business Bay, and that's not just this one. A lot of towers in Business Bay have the same kind of situation. And I'm going to tell you exactly why. Because when you can buy the same thing, an older tower, 6, 7 years older, looking exactly the same, the tenant is going to go there. And when you have less tenants, basically tenants are not paying your prices, your premium prices, then, you're just going to go with other towers and the price is going to depreciate. You can basically check most of the market in Business Bay, downtown, any other area. And by the way, before I go, like I show you this, guys, we have multi 8-figure in investments. We've got over 200,000 square foot, 200,000 square foot in warehouses, in industrial warehouses. We have over 300,000 square foot in empty plot. Our family has been investing in real estate for a very, very long time. So internationally. And Dubai is kind of one of the markets that we invest to. So this is coming from investor to investor with multi 8-figure portfolios in both warehouses, residential. We've got commercial buildings in Iran. I'm nationality Iranian. Our tenants are banks, gyms, basically commercial offices. So we've got a lot of property internationally. And still, one of the biggest scams I've ever seen in the overall like Dubai's history is off plan, something that's become a trend, and Dubai just makes it look so nice. That's what they're good at, marketing. But please, for God's sakes, do not fall for it. Now let me show you the specific area declines. 2018, 2019, Beirut report. Beirut is one of the biggest real estate aggregators, I think the biggest ones. Beirut and Dubizel are like the same company. By the way, Palm Jumeirah year over year declines 16.6%. Okay. Business Bay 5%. Downtown Dubai, one beds 9.1%. Discovery Gardens 15%. And these are offline prices, right? So with the strategy, I'm going to tell you, you're going to save all of this. Okay, you're going to make 10% net profit in rental income, and this is one of the best ROIs internationally. So Dubai can be good for that only if you know what you're doing. Okay, so guys, I'm going to stop like shitting on offline. I think you get the picture. You can go check the actual numbers yourself. Okay, the agent ecosystem. I'm going to go to the main ones actually. So here's a solution I found for myself, and I've been investing with this strategy. And I do have like apartments. My highest ROI apartments are using this strategy. In fact, I have like 4 off-plan properties myself, guys, that are not ready. But I've also bought like 2.5 years ago on pre-launch, so I'm waiting, for the handover in a month. But anyway, I've bought it. I might resell, buy another one, like change it. But anyway, I'm saying like I've also been victim to off-plan. That's how you learn your lessons. Like you can get a lot more ROI with buying secondary. So here's the thing. The 6-step process to get 10% net ROI. First of all, we source undervalued deals. So how does that work? So we've got a couple of prime areas that people always want. You need to know them. You've got JLT, you've got Dubai Marina, you've got Blue Waters, which is kind of like right now trending. You've got, for example, Creek Harbor, which is also, still not developed, but it's developing. Business Bay, downtown. These are like my favorite areas that basically people live there. So if I buy an apartment, I'm not going to be worried to find a tenant there, right? So that's the first thing. We need to find areas that they're not developing. They're already developed. People live there. People want to be there. They have to go to work there. There is a metro station there. There are like activities that people actually go to. Tourists go there, like interesting things, right? Dubai Marina has them. Business Bay has them, like 60% commercial offices. So people need to go there. Downtown, you've got Dubai Mall, Burj Khalifa, like a lot of activities there, right? So Europeans would prefer to go there. So first of all, you pick the area. Now, secondly, our target is to buy 10% to 15% below the market price. I'm not going to tell you it's an easy process, guys. It's a very difficult process. What I usually do for this, I put 200, 300 offers, maybe even more. So here's the way I do it. I find older towers in good areas, basically 5, 6 years old, and maybe a bit longer, maybe a bit older. So here's the thing. When you search for these kinds of towers, you're gonna find out that they're like 20, 30% below other tower prices. And that's the thing with Dubai. When you let the towers age a bit, they depreciate in value. But guys, does it make it a worse tower? Like in reality, okay, it's an older tower, doesn't make it a worse tower. I've seen many, many stupid agents tell me this is an old tower. What the hell? Like, are you selling me like a fancy dream? Agent who's never owned a single property, a single penny to his name, is gonna tell me what to buy, what not to buy. Guys, our family has bought plots that have given us like 30x multiplier. That's how you make money, Habibi. You don't buy from agents. You know what to do. You just use agents as a vehicle to buy that property for you. Okay? And unfortunately, you're listening to people who have no idea what's gonna appreciate, and they're gonna teach you what to do. Listen to investors. Listen to me, okay? Because I have my. It's not about you. I've got my own best interest in mind, and for that, I'm just sharing what I've done for my own interest. So you find those older towers. That's the strategy. If you have a smaller amount of budget, you can buy two, three of those apartments. If you have a bigger budget, 2, 3 million, maybe $10 million, sometimes even like $15 million or higher, doesn't matter. You go into buying a lot of these properties, right? Still the same strategy. Doesn't matter how much you have. If you have more budget, you just buy more. That's it. So you buy these properties, you put like crazy amount of offers. This is usually done by agents. Don't like panic. You just need reliable agents. And in case you need agents, I've got like reliable agents that actually work with me on this. So basically, you put crazy tons of offers on these older towers. These older towers are cheaper themselves. But by putting a lot of offers on these older towers, you're gonna get distressed sellers. Basically, distressed sellers that will sell below market value because they need money. And you may not find them on Property Finder and Bayut. So the way we do it with trusted agents, we go put offers directly with the owner. We tell them, are you interested to sell? They may reach back to us in 3 months, but I don't care. I'm here to invest long term. And only the prime locations as mentioned. And number two, these old towers don't look that nice. So you do a proper renovation on them, and then you actually increase the value. So you spend around like 70, 80,000 dirhams. You do a proper renovation. You furnish it. You make it look very nice. In my previous videos on YouTube, guys, I've showed a couple of my renovations. I haven't included it here, but you can go watch back the previous videos. I've included like the kind of renovations I've done. Nothing crazy, nothing crazy. But the two towers that I've done full renovation on, basically I renovated like from scratch. I changed the tiles, I changed the bathroom, the kitchen cabinets, and then I furnished them. These have been my highest performing ones, okay? And I use, okay, now here's the thing. Even though the apartment is gonna look very nice. So here's the thing. When you have an older tower, but your apartment is the best one in the area. Why? Because you've done a proper renovation. No matter how good the towers are, guys, even if they're good. Usually they're simple. And if you do a proper upgrade and a proper renovation, they're gonna look better than any fancy, expensive off-plan scam. I'm gonna show you of that. If you do a proper renovation and you have a good taste and a good design, you can make it look better than any other fancy tower. On the outside, maybe they're a bit fancier, but on the inside, yours is gonna be fancier. And guys, the guests or anyone living there, they want to live there. It's important. The main thing is the location. If you have a nice location, as I told you, and if you have a proper furnishing, your property is gonna beat them because the person wants to live inside, not on the outside. And you might even end up making more than these offline scams, okay, that people buy for a really expensive price. Now the main thing, I'm personally using a mixture of short-term stays and mid-term stays. So right now in peak season, you're gonna earn a lot of money by listing your property on Airbnb, Booking.com, and all those platforms, and that's what I'm doing right now in peak season. So when we have like short-term stays, I've signed up for Property Finder, Bayut, so I can list my properties for mid-term stays, basically monthly stays, or maybe someone wants to stay like for 3 months, right? I have a fully renovated property, I'm gonna rent it to them, okay? You make more if you're active on short-term stays and mid-term stays, right? If you combine these two. But if you don't want to deal with the headache, you can do long-term stays for less ROI. Obviously, the more active you are, the more you can make. But if you don't want to go through that, you're gonna have like long-term stays, less ROI. You cannot hit 10% with long-term, to be very honest with you. But if you go with short-term and mid-term stays, for example, my apartment, I'm saying like 10%, guys. It's doing 12% every single year net profit. But it's a distressed deal. Like if you buy it for the market price, you're not gonna hit these numbers at all. So that's pretty much how you do. By the way, if you need help with the management, everything like that, I'm gonna show you like exactly how you can do it yourself, short-term stays and mid-term stays, and how you can get these ROIs. Like if you're actually serious about long-term investment, do let me know. I will help you with the management side and basically show you how you can implement this strategy. And you need professional operations for this. So I'm gonna show you like what it needs and what you can do. And pretty much you refinance and scale. Basically, if you have a salary or an income in Dubai, okay, even if you're not in Dubai, when you build a property, you have income. So if you can show that income to the bank, right? You say, for example, I'm earning, let's say, $5,000 a month on each property on rent, right? You can refinance it depending on the bank. You can get 60 to 80% refinance. So if you have $3 million, you can refinance 60 would be like 2.4 million. No, sorry, it would be 1.8 to 2.4 million dollars if you invest $3 million. You can get like, let's say, 1.6 million dollars to 2.4 million dollars in refinancing, and you buy more properties with it as rental income, and you rinse and repeat this process. Okay, and that's pretty much it. So why choose Dubai overall if you're not already in Dubai? Guys, tax-free compounding. You have to check this with an attorney. For like some countries, you still have to pay tax to your own home country, which is a scam. Again, tax is the biggest scam ever. We have full asset control. Basically, here for long-term tenants, you're gonna have like a lot of issues in Dubai. That's also something you need to know, guys. If you're just an investor, please work with a property manager. Only a property manager, because you may have issues with long-term tenants, legal stuff, right? But if you have a professional property manager, they can help you with that. Again, if you do need help with this, with the property management side, do book a call. I'm gonna show you exactly what you can do for long-term and also short-term rentals, right? Depends on which one you want. And Dubai is currency hedged. Basically, it's been backed with dollar. Basically, it's been each dollar has been 3.67 dirhams, right? And it's pegged. It's been like that for a long time. So your currency is a strong currency. And you can exit these types of properties, the one that I mentioned to you, easily, very easily, because you're buying them easily. You're buying them at a good price, and you have clean title deeds. Basically, you can check them on your portal. Everything is like digitalized, and that's why Dubai works. And guys, a bit of background about me, as I mentioned. You can also watch our previous video. I'm gonna share. I actually uploaded a video about our warehouse. So our main family business have been commodity trading for over 100 years. We have traded commodities like citric acid, all kinds of spices, rice, coffee beans for over 100 years internationally, and we have more than 100 items. We've been personally investing into real estate as part of our company's revenue has always been parked in real estate. We've got over 300,000 square foot in empty plot in premium areas. 200,000 square foot plus in warehouse area in the residential areas. So this is not in some kind of bad area. I did a video showing exactly the ones we have, but obviously it's been built over generations. It's not like a quick thing that we've done. We've got commercial buildings, and by the way, these are all 100% paid off. Like we never bought with any mortgage, so everything is fully bought in cash, and we've been always buying in cash. But overall, in Dubai, I plan to use loans for sure in the future because it's a pretty easy process. And that's pretty much a bit of background about me. So the entire messaging I gave you today was investor to investor, not an agent. It was just an opinion that I have about the Dubai market, and I hope investors don't make mistakes like this. Because look, with $3 million, if you buy the wrong properties, you're just going to get 3% ROI on that every single year. So that's going to be $90,000. But if you buy the right ones, let's say you make 10%. So you're going to make $300,000 on rental income instead of $90,000 with a lot of these developers. Guys, very low ROI because you buy them very expensive. First of all, you're going to depreciate. Your $3 million is going to become $2.4 million. And you're going to earn $90,000 on them. But with the strategy I'm telling you, you're going to be saving millions for the years to come. Let's say in 10 years, if you make the right decision right now, you're going to make millions on rental income that you would have missed. So please, please, please take this very seriously. If you need help with any of it, I've already done it. I've got trusted agents, I've got trusted property managers. Do book a call with me. I'm going to show you exactly what you can do. Investor to investor, only serious talk, non BS. For now, ciao, guys.